It's widely believed that the Bank of Korea will leave the policy rate unchanged for the sixth time straight in Thursday's rate-setting meeting. Then, should we be relieved to say that the rate hike cycle is over now? For more, we are joined by Professor Shim Myung-kyu this morning. Welcome.
Good morning.
South Korea's central bank is expected to leave the policy rate unchanged at 3.5% tomorrow. Professor Shim, are you also on the same page?
Yes, I also think that the BOK will not raise the target rate at this upcoming meeting by several reasons. First, the Fed did not raise its target rate in its previous meeting, giving more room for the BOK to keep the same rate. Second, as was emphasized by the recent report by the IMF, the household debt in Korea is really the problem. According to the IMF, DSR level was the second highest among all the countries that reported DSR last year, and that makes the BOK to hesitate raising the rate. Third, compared to the last year, inflation rate measured by the CPI has become lower.
I see. Then let's delve deeper, Professor Shim. Can the crisis over in the Middle East become a factor in the BOK's interest rate decision-making in the future, or has it already?
Sure, and I think it has already become one of the key factors that the BOK should care about. Most importantly, it will increase the uncertainty on the oil price as the crisis can be expanded to the Middle East. Price of both Brent and WTI crude oils have surged around 5 to 7% since the emergence of the war. While there might be no immediate impact on the inflation rate in Korea from the war, because it will take some time to observe the kind of the spillover effect from the war, but it will eventually affect Korea. Also, a research by my colleague found that the increase in oil price uncertainty itself has the negative effects on the global economy, so that we also have another possibly negative news on Korea.
Sure, the more prolonged the war becomes, the heavier impact the crisis will have on South Korea. Now, if there is a rate freeze at 3.5% tomorrow, it'll be the sixth consecutive one since January, right? Now, in theory, ending the rate pause to tackle inflation should help revitalize spending here in the country. Is that the case?
I don't think that pausing the interest rate hike can stimulate consumption or the economy, because consumption is not just a function of the interest rate. It is a function of current income, future income, and wealth as well, so that if the economic condition does not become better, then I don't think that just pausing interest rate hike will increase consumption. So let me quickly point out that the expectations on the future economic activity in Korea has become worse since August again. This implies that on average, households in Korea would not want to increase their consumption expenditure as their views on future income are not rosy, and hence rather they will save rather than consume.
Sure, so the rate freeze will not directly influence the spending here in the country, you're saying. Then, would you say the door for additional rate hikes this year is closed?
I still think that there still is a chance to raise the policy rate. The first reason is that the Fed still opens the door to increase its target interest rate. Second, inflation rate has rebounded in Korea since August, implying that this high inflationary episode might not have ended. Third, as I pointed out earlier, the Israel-Hamas war together with Ukraine-Russian war are remaining threats for the future inflation rate, so that the BOK has to prepare for the possible inflation in the future.
I see. Now that you've mentioned the Fed is scheduled to have two more rate-setting meetings this year, one in late October, later this month, and also in December. Considering what Jerome Powell is saying, the fight against inflation isn't over, we should probably assume rate hikes are on the way, right? If that's the case, when would that be?
Yes, I also expect that the Fed will raise its policy rate once again, maybe this year. And there are many reasons why I believe so. First, there are signs that the US economy can still endure the potential hike in the rate. The labor market is still good, and consumption expenditure in the US has increased for the several months, so that there is still room for the Fed to increase the interest rate. And also, as you pointed out, Jerome Powell continuously signals the financial market that the Fed can raise the rate. And the inflation rate was 3.7% last month, and it is still much higher than the target inflation rate of the Fed, which is 2%. So that I still think that there is a possibility that the Fed will increase the interest rate maybe this coming meeting or maybe later.
Right, so you mean by later, can we say that maybe next year? So are you saying that if there's no rate hike within the year, so within the next 2 months, there will still be another rate hike, at least in the first quarter of 2024, right?
Yeah, that's what I expect.
All right, Professor Shim, thank you so much for your time this morning. You have a great day.
Thank you too.